Thank you for watching this video. Today we will be doing technical analysis on the stock market for Monday, November 9th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for. And I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today, the S&P 500 was up 1.17% and closed at 3550.50. The first chart that we're going to look at is a 2-day, 2-minute chart of the S&P 500, so each candlestick does represent 2 minutes of trading. The reason I went with this particular chart style is I wanted you to be able to see this gap up at the opening this morning, and that's really where all the gains came from for the day. And you can see that we hit the peak in the market just a few minutes after the market opened, and the high of the day was 3645.99. Now, the significance of that, and the reason I put this first blue line up here, this is at 3600. I wanted to point out that this was the first day ever in the history of the S&P 500 where we traded above 3600 on the S&P 500. And you can see that about 3:15 in the afternoon, we started to sell beneath the 3,600 level and then closed at the lows of the session. Still up 1.17%, but we barely missed hitting a new closing high on the S&P 500, and that's why I put this second blue line in there. This blue line here represents the all-time closing high in the S&P 500, which was back on September 2nd. At 3580.84. So you can see here it was just the last few minutes of trading that took us away from closing at a new all-time high, but we came pretty close. And this is just another way to look at the data. This is a 1-year daily candlestick chart of the S&P 500, and you can see here that today, for the majority of the day, we were trading at all-time highs, and we closed just beneath the all-time high, which was set back on September 2nd. Again, 3580.84 was that day's close right there. So we came really close, but just didn't quite cut it. But still a very nice day in the markets. And guys, we've had quite a stellar run over the last week and a half. So it probably would be reasonable to expect some type of a pullback over the next few days, but only time will tell. But we've had quite a stellar run in the stock market over the last week and a half or so. And what we can see here on the DIA, this next chart, is that the DIA, the Dow Jones Industrial Average right here, this was an all-time closing high. We were up 3.01% on the DIA, which again is the ETF that tracks the Dow Jones Industrial Average. And this was an all-time closing high on the DIA. And we did the same thing in the IWM, which is the ETF that tracks the Russell 2000 small caps. This was an all-time closing high in the IWM. We were up 3.72% today in the IWM. So huge day in small caps. And this is a 5-year weekly candlestick chart. And any of you that have been watching my videos for a while know that I've talked extensively about this and the fact that right here was the previous all-time closing high on the Russell 2000 small cap ETF, the IWM. And I've been talking about the fact that if we could get small and mid cap participation, it would help broaden out from a capitalization standpoint this rally, and that could be a really good thing. So today we did that. We'll have to wait and see if we're going to get some follow through and if small and mid caps are now starting to rally. But you can see that for the last couple of years, we just were not making any progress in small caps up until today. So this was a very good sign, and the same thing in the mid cap. So this is the MDY, the ETF that tracks the S&P 400 mid cap index. It was up 2.83%, and again closed at an all-time closing high on the MDY. And when we take a look at the 5-year weekly candlestick chart, the blue line kind of represents where it had peaked before. That was earlier this year. So unlike the small caps, right, which hadn't made any new highs since 18, the mid cap index had peaked in Q1 of this year. But with today's close of 2.83%, we are now at a new all-time closing high on the MDY. The ETF that tracks the S&P 400 mid-cap index. The triple Qs, the NASDAQ 100, however, was down today, down 2.09%. So we have not hit a new all-time closing high in the triple Qs since early in September. And you can see we're making some lower highs. So, we'll have to see if that is an ominous sign, if this kind of marks, where the market's going to roll over for at least a short period of time, or if this was just somewhat of an anomaly where we had some things that, like mid-cap and small-cap, that hadn't been participating in the rally for the majority of this year, where they just kind of kicked in. And, if you look at some of the sector stuff, which I don't have the charts pulled up here for you, but energy was up huge today. Financials were up huge today. So there were some things that really worked today that hadn't been working. Conversely, the things that had been working quite well, like tech, which has been the strongest area, the triple Q has been the strongest area of the stock market for this year. Obviously, this did not work today, so we'll have to see over the next few days, whether tech continues to take leadership, or if we're getting a little bit of a rotation here, and if large cap tech is going to take a breather while some of the other things start to work. But the one thing I didn't like about today is the fact that we closed at the lows of the session. And this pattern right here, guys, potentially could be a little bit of a short-term reversal in the stock market. So we'll have to keep our eye on that. But, with the news, in case I didn't mention this earlier, a lot of this rally, so I apologize if I didn't get this out earlier, but a lot of this rally was on the back of some positive testing that Pfizer has done on a COVID vaccine. So that really gave a huge boost to these markets early on, and that's why we had that massive gap up. But the fact that we closed at the lows of the session, and the fact that the triple Qs did not participate in today's rally, we'll have to keep an eye out for that, right? See if that's telling us something. But good news, the really good news, is small and mid caps had a massive day today and are now trading at all-time closing highs, as is the DIA, the Dow Jones Industrial Average. And folks, if you're not yet a subscriber to Simple Market Signals, I want to encourage you to take a serious look at Simple Market Signals. It is my own personal risk management system that took me 20 years to put together. It's 20 years of research, trial and error that went into this model. And over and above anything else you're doing with your own technical analysis, whether you're a individual investor or a financial professionals. I have a lot of financial advisors, hedge fund managers, guys that run RIAs, wholesalers, mutual fund wholesalers. Regardless of whether you're in the industry or if you're an individual investor, Simple Market Signals will help you. It will enhance anything you're already doing, and it really helps to take a lot of the emotion out of understanding what's going on in the markets, because there is nothing easy about what we do as investors and traders, and this has been an extremely difficult year, full of all kinds of extremes, including the fastest bear market ever, the fastest bull market ever. We've had some of the best 1 and 2 days after a presidential election. You get days like today. So guys, we all need as much help as we can get, and we need advantages. We need an edge. And for many, many of us, hundreds of my subscribers, as well as myself, Simple Market Signals is one of those tools that really can make a difference. And guys, it's less than $20 a month. So with that said, I'm going to tee up a little bit more information about Simple Market Signals, and I will see you in the next video. Let me ask you a question. Do you have a stock market risk management system? Something that helps you understand the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the short-term trend on an ongoing basis? Do you know the direction of the overall trend in the stock market? My system is called Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecasts, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market. And I studied the stock market over numerous time frames, including in numerous bull and bear markets. And what I found is that certain conditions exist during these various market phases. And then based on that information, I created simple, easy to understand signals around these different phases of the market. And the thing is that most people don't know about or have access to the data necessary to do the research that I had to do to put together this model. Now let's take a look at the signals. The red signal has the highest equity risk associated with it, and the worst sell-offs, including bear markets, will happen when the signal is red. When the signal is yellow, this means that equity risk is moderate, and sideways to slightly up or down price action is very common during a yellow signal environment. The green signal is the best signal. It has the lowest equity risk associated with it, and most all upward progress in the stock market will be made in a green signal environment. Said another way, it is very hard to make money in equities unless the signal is green. Okay, a quick refresher on the Simple Market Signals weekly signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red, and what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Now let's take a look at the first 3 months of 2020 so you can see how Simple Market Signals could have helped you in the most recent downturn. We know that we came into the year with a strong stock market, so we had a green signal for the majority of January, but on January 27th, the signal went yellow for a couple of weeks. We went back to green in the first part of February, and I warned my newsletter subscribers on Saturday, the 22nd of February, that I felt like the market was starting to roll over, and that things were changing. And so I gave people a heads up right here over the weekend, and I told them that if the market continued to sell off, that we would probably see at least a yellow signal, if not worse, the following week. And that's exactly what happened. On the 24th, the Simple Market Signals risk signal went yellow. Now, one of the other things that I want to point out here is, in addition to the risk signal, I also have several trend direction indicators in this Simple Market Signals model. Now, the longer term one is called the general trend indicator, and the general trend indicator went negative on the 25th. So on the 24th, the signal went yellow. The general trend indicator went negative on the 25th, and then 2 days later, the signal went red. The risk signal went red. So think about this. All in 1 week, just a few days apart, we had a yellow signal, we had the general trend indicator went negative, and then we had the risk signal went red on the 27th. That was Thursday, all right? And by the way, this general trend indicator is a positive negative signal, and it operates totally independently of the risk signals. It's just trend. So the general trend indicator gives you still another way to monitor and control risk in your portfolio. And guys, that general trend indicator had been positive since October and then went negative. So right there, just those two signals alone told us that something was changing in the stock market. And then by the 27th, the signal had went red, and we can see here that the market fell from there. As part of the Simple Market Signals model, there are three powerful indicators. There's the Simple Market Signals proprietary risk level signal. There's the short-term trend indicator, which helps clarify short-term moves in the overall U.S. stock market. And a normal signal length for the short-term trend indicator is anywhere from 1 or 2 days to 7+ weeks. Then there's the general trend indicator, which is designed to stay positive during the bulk of most uptrends and negative during the bulk of most downtrends. And a normal signal length for the general trend indicator is anywhere from 2 weeks to 5+ months. We disseminate the information through the Simple Market Signals weekly newsletter. In the weekly newsletter, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the short-term trend indicator signal. You will also receive the general trend indicator signal. You will also receive market and sector performance information over multiple time frames. You will receive a recap of what happened in the stock market for the past week. You'll also receive technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information every week in the Simple Market Signals newsletter. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents per day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. And guys, I want to set realistic expectations here, okay? The newsletter isn't fancy. It's effective. It's plain text, no color, no fluff. And please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. Now let's recap what you will get with your Simple Market Signals subscription. You will get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there's a major signal or direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to get that information to you as soon as possible via a special midweek update email. The best fit for a Simple Market Signals subscriber is an investor or trader with at least a 6 to 8 week plus time frame that they're focusing on. If you're a day trader or a really short-term trader, Simple Market Signals may help you a little bit, but the reality is Simple Market Signals is designed for those investors and traders with at least a 6 to 8 week plus time frame that they're focusing on. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video. And to subscribe to Simple Market Signals, you just need to go to the website that you see on the screen here. That's https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service, and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an emailed newsletter, so we will have to have your best email address on file, and make sure this box is checked, because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system, and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. Now, when you subscribe, Okay, understand that everything is tied to your email on file. All right, so once you subscribe, you go out to the website, simplemarketsignals.com, and it'll take you maybe 5 minutes to subscribe. It's pretty easy, and you just follow the prompts, and then your email on file is then going to drive everything going forward. This is an emailed newsletter subscription. That's how we disseminate the information, and you should get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter that is automatically generated once you subscribe. So if you don't get that welcome letter beyond your confirmation, okay, of the subscription, if you don't get that welcome letter, if you don't see it in your in basket, then go check your spam, your junk, or your promotion folders, especially in Gmail. Having a lot of people that are having the newsletters and everything coming from Simple Market Signals going into the promotion folder. So please make sure that you check your spam, your junk, and your promotion folders. And also understand that the newsletters go out on the weekend. All right. So the goal is to get it out Saturdays by 2 p.m. But it could be any time over the weekend, depending on how long it's taken me to do the research necessary for that week's newsletter. But I try to get it out by 2 p.m. Eastern Standard Time every Saturday if I can. Again, earlier if I can make that happen. And then the next edition, right, once you subscribe, understand that the next edition, right, so if you just subscribe on a Monday, Tuesday, Wednesday, whatever, the next regular edition is going to be set out on Saturday. All right, and then once you subscribe, we will send you as soon as we can the latest edition, but we have to send that out manually. So just be patient with us. But again, within a day or two of your subscription, if you don't get this latest edition, then go back and check your spam, junk, and promotion folders. Because it's probably hidden in there. All right, so you should get the automatic welcome letter, and then the latest edition within the next day or two of your subscription, and then again the standard newsletter goes out every weekend. But we try to make it no later than 2 p.m. Eastern Standard Time on any Saturday.